gold had that run to 3,500, back a month or two ago, and it's been kind of consolidating that for a little while here, and people may be kind of wondering if gold's had its move, but I don't think so at all. I think that consolidation is just kind of giving it another fresh start here. And as you said, I'm looking for 4,000 this year. I think this summer you're going to see gold have a very nice run from 3,400 area up to that 4,000 area. Silver is around 36 right now. I think I've got a target of 75 that I think we could reach by the end of this year. So silver should do. I think silver will outpace gold.
Natixis expects the price of silver to decouple significantly from the price of gold. The correlation between the two precious metals has historically been very high at 0.8. Since the beginning of 2025, however, this value has fallen to 0.55, which, according to the experts, should support the price of silver. Silver, the analysts explain, should now be significantly less influenced by the development of the gold price. Investment professional DavidHunter predicts gold will surge to $4,000 and silver to $75 by year-end. He sees silver outperforming gold as the metals bull market accelerates. However, he adds that mining stocks are starting to gain traction. While short-term pullbacks may occur, he remains bullish on the overall trend. The metal is currently in its third major bull market since 1971, with the potential for significant further price appreciation based on the magnitude and duration of prior bull runs. Looking at the current trends, Hunter mentions Trump's tariff plan is gaining acceptance. He expects 10 to 15% tariffs, more trade deals by the end of summer, and a vote on the Big Beautiful Bill soon. Hunter sees tax cuts, deregulation, and pro-growth policies driving markets higher. He predicts that once Trump's agenda is fully priced in, gold is up by more than a quarter this year, trading about $160 short of April's record, supported by elevated trade and geopolitical risks. Uncertainty over the long-term impact of Trump's tariff and fiscal agendas on the economy led to a gauge of the dollar dropping almost 11% in the first 6 months of the year, the worst performance since 1973. That makes gold cheaper for buyers in most other currencies. Before we dive into DavidHunter's sharp insights from his latest interview, make sure to hit that subscribe button and tap the bell icon so you never miss a moment when truth meets the market.
I think metals have obviously silver took a while to get going, but silver is even running now, and gold looks great. Gold had that run to 3,500, back a month or two ago, and it's been kind of consolidating that for a little while here, and people may be kind of wondering if gold's had its move, but I don't think so at all. I think that consolidation is just kind of giving it another fresh start here. And as you said, I'm looking for 4,000 this year. I think this summer you're going to see gold have a very nice run from 3,400 area up to that 4,000 area. Silver is around 36 right now. I think I've got a target of 75 that I think we could reach by the end of this year. So silver should do. I think silver will outpace gold. Both will do well, but that's what typically happens when you really get going in a bull market in the metals. Is silver takes the lead, and it hasn't been the leader, but I think you're starting to see signs that it's going to be the leader. Both, like I said, it doesn't mean gold's going to do poorly. Gold's going to do very well too, and the miners, which have been frustrating for some investors until lately. I think those are going to continue to do very well as they have recently. So that there's going to be pauses. These things don't go straight up. There's going to be times when they get overbought and they need to kind of take a breather. Some of those breathers are high-level consolidations. Others you can get hit quickly in a bigger sell-off and then come back again quickly. So it's hard to know exactly the path it'll take. But I think the miners look really good here. I think it's pretty clear. He was sincere in what he wants to do. I think he likes, and I think others are starting to like the fact that there's a pretty good increase in revenues coming in from tariffs. I think the street's getting more comfortable with the fact that we're probably going to see a 10% tariff across the board in many countries, maybe not all. And in some cases 15%. So you get the benefits of tariffs and the revenues from that, but it's not enough to disrupt the economy, disrupt our competitiveness out there, et cetera. So I think that's what we're looking at, is the street coming around to the fact that, Trump did this, pretty well. I mean, and they're, if you listen to Scott Bessent, Treasury Secretary, it sounds like deals are coming along. So we are going to get, I think, quite a few trade deals between now and the end of summer. So you probably get, the Senate passed the big beautiful bill today, so it goes back to the House, and we'll see what the two can agree on. And I think we probably do get a vote, maybe by the 4th of July, if not by the 4th, probably next week. Um, and and so you got, Trump getting his big beautiful bill, and then most of his agenda items will be in there to pay for. He's getting he's getting tax cuts, and I think he's going to get, he's already getting some, and he's going to get a lot more deregulation. And so what you get is Trump's agenda getting pushed through. The market, at least this summer, is going to receive that pretty well. Be pretty bullish about that. And at the same time, psychology is such that, as I said earlier, the vast majority of institutional investors have fought this bull market for quite some time, for really since 2022. They got very bearish, obviously, in April with the tariffs, and they're just coming around now as we make new highs to say, oh, maybe we got to get on board. So I think that's what you're going to see over the next month or two, is the benefit of Trump getting his agenda passed, and investors seeing that as a positive. Deregulation helping the economy, along with the tax cuts, and basically, as I've said for a long time, what you're going to see at the top, which, as I said, could be S&P 8,000 or higher, is most investors all in. Whereas they fought this thing all the way up, they're going to be bullish at the top.
In his assessment, DavidHunter maintains that markets can rise even amid the economic slowdown fueled by Fed easing, falling interest rates, and a weaker dollar. He views a near-term soft landing narrative supporting earnings and valuations. According to DavidHunter, Trump secured major wins, such as tax cuts and border enforcement, even if not all proposals were passed. He also praised Elon Musk for exposing government-linked corruption. Hunter criticized media bias and emphasized Trump's swift progress. Gold steadied as investors weighed concerns about the U.S. fiscal position, together with prospects for the Federal Reserve's monetary easing path ahead of key economic data. Trump expressed frustration on Monday over the pace of trade talks between the U.S. and Japan, while Treasury Secretary Steven Mnuchin warned that several countries could soon face sharply higher tariffs, Reuters reported. The tariff rates, ranging from 10% to 50%, and initially announced on April 2nd, are set to take effect on July 9th, following a 90-day pause approved by Trump, unless bilateral trade agreements are reached before then. Concurrently, Hunter underscores concerns that Trump-era deficits are overstated, as tax cuts and deregulation are expected to boost growth. He criticizes the CBO's static models and expects policy benefits to emerge after a post-bust recovery. Let's get back to the interview.
Yeah, my forecast for a long time has been that we would see the market rise while the economy was moving into recession. So this is exactly what, it was a playbook I called. And I think people did not understand that slowing economy means lower interest rates, means Fed coming on board and wind at the back because the Fed is easing. All that's coming. The dollar's down. That's helping certainly in some areas. So I just think people have misunderstood how markets work and have continually fought this. Now, at some point, the economy in my forecast gets very rocky. In fact, we move towards a global bust. The market's not going to go up in that. But for the next few months, I think the narrative is going to be soft landing, lower rates, lower dollar, earnings still being held intact, quarterly earnings still looking pretty good. And so you get kind of your cake and eat it too. PE multiples can go up on solid earnings. and people can still remain pretty sanguine about the economy. As we move towards later in the year, into later in the fall and winter, the economy could really start getting a lot weaker. And it's at that point that I think maybe, equity investors are going to have to worry about, the fact that earnings could roll over and get hit pretty hard. There were a lot of things in the bill, some of which the parliamentarian took out. So he's not getting all his wish list to try to get the sausage made in Washington. Unfortunately, some things don't get through there. But I think Trump, obviously, his biggest agenda items are securing the border, deporting those that have illegally come here, particularly the more the criminal side of that. And so you still have a wall to be built. You still have facilities to be built on that. So he wanted that in there. He also wanted the tax cuts. He's getting those. He does have things in there from Doge, but most of Doge it cannot be put in a reconciliation bill. Those are things that are going to hopefully get passed after the reconciliation bill. It's not going to be nearly $1 trillion or whatever they were talking about early on. I think the battle between Musk and Trump is too bad, because I think it takes away from what really was accomplished early in his administration here in terms of uncovering USAID and all the. I mean, the American public should wake up and realize politicians were stealing their money. Basically, money was funneled out to these non-governmental organizations, and then funneled back into the pockets of politicians, or funneled into pet projects, etc. It is criminal what they were doing, and Doge uncovered that. I don't think anybody should forget, and I think Musk deserves a lot of credit for what was uncovered, and he assembled a team very quickly that were pretty savvy from a technology standpoint, and uncovered some of these things. Again, you have to be careful what you hear from the news, because the media from day one on this, it's disgusting how much they want to spin everything negative on Trump. Trump is accomplishing so much more than any president in our time has accomplished in such a short order. And what he is doing is trying to undo a lot of damage that's been done over decades, not just by Democrats, also by Republicans, in terms of the establishment politicians down in Washington. I mean, it is criminal, really. Our country has been, the voting public, or public in general, has really been bamboozled by these people. So I think Musk deserves credit. Trump deserves credit. You seem to be hearing the spin that I think the media is putting out there, and I think it's way off. Obviously, if you do it on a static basis, which is what the CBO does, the Congressional Budget Office, if you do it on a static basis, you've got deficits for as far as the eye can see, to the tune of $2-3 trillion. And that's what Wall Street's worried about. That's what the bond markets worry about. Unfortunately, too many people do not understand that supply side economics does work. That if you get the deregulation that Trump is putting forth, if you get the tax cuts, if you get some of his other agenda items, you will see an economy prosper, and the deficits will come in as you generate more revenues. And we're already seeing, although I think some of it will change, obviously, with the economy softening and ultimately a bust. That'll definitely change things. But at least so far, all the doom and gloom about what Trump's policies were doing in terms of driving up, the costs and creating higher deficits have proven false. It's early, and I think some of that is going to come in, but this, the fears of inflation from tariffs, the fears of, massive deficits from his programs, all that's, I think a lot of it's people trying to convince the public that he's a bad guy or that he shouldn't be there, etc. So I do think that ultimately we're going to be pleasantly surprised in terms of the deficits, because I do think the tax cuts are going to make a difference. Again, I understand we're really just for the bulk of the tax cuts, we're just keeping in place what we already have. So that's not necessarily additional stimulus, but we are, the no tax on tips, no tax on overtime, the the tax credit for Social Security, along with some of the business tax benefits that are being put in here, all should stimulate the economy relative to what we did have. And so I think, again, CBO is always wrong on this stuff. They always do this from a static standpoint. They're only looking for 1% growth in their model to talk about what the deficit's going to be in future years. I think you can count on probably 2.5% or higher in terms of post-bust. Now, the bust is going to wreak havoc in terms of all of this. So I still am a bear in terms of what's coming. But the second half of his administration, I think you'll see some of the real benefits from his agenda.
Gold and silver continue to climb higher in a stealthy bull market. Very little attention has been paid to the massive price increase over the last few years. A recent article highlighted how gold has outperformed the stock market over the past 25 years. If silver begins to decouple from gold as Hunter predicts, could we be entering a new era where silver leads the next major leg of the commodities bull market? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the following video.